expected of you is to follow your trading plan, show off every single time, follow your trading plan, and then wait for the outcome and be willing and be ready to accept that outcome. Here's a trade that I took a loss of 200 and you can see $290. And I took this trade on NASDAQ on 27th of August 2025. I'll be reviewing trades I take, whether those trades result in loss or those trades result in profit. Okay, here's the NASDAQ trade. Let me break it down. So, because there is always lesson for us to learn in losses and also lesson for us to learn in wins. And for this trade, I am looking at the daily time frame. I'm expecting a high price expansion. Price tap into this fair value gap. And when we look at SPOs, we can see they are in sync with what NASDAQ and SPOs are doing at the same time. They tap into this internal range liquidity. And same thing with NASDAQ, this internal range liquidity. And I'm expecting that price delivery. And this high is my first target. That is 23.71. And eventually, I'm expecting price to come for this external range liquidity. That is around 23.985. So I go down to 4-hour time frame after having my bias from the daily. And on 4-hour time frame, yeah, you can see we have this price coming back to this large imbalance, taking this sell side liquidity, okay? And after that, we have this 4-hour fair value gap and another 4-hour volume imbalance. You can see the 4-hour volume imbalance, which is now an inversion volume imbalance. And then you see on 4-hour time frame, we see more reason to go long. So I go down to lower time frame again. I go down to 1-hour time frame. And on 1-hour time frame, you see how price come back to this 4-hour volume imbalance. The level is still very valid, and price came back swiftly and mitigated this during New York. We have the New York Judas and price pushed lower first, making this Judas leg, and then price rallied off, taking out this high. So during the VM kill zone, I expected price to continue going up. And we have this inversion. Price rejected this inversion with wicks, which is the perfect rejection we always want to see, and then breaking this high again. So I expected price to continue soaring high. So I went to 15-minute time frame, and on 15-minute time frame, you can see we have this structure, price breaking this high. Then we have this deep retracement after taking this sell side. Price came back to this fair value gap. And then on the PM session, this is the entry I expected price to actually reacted on and continue going up. My risk is 1 and my target is 2. I plot the setup as 1:2 risk to reward ratio. So this is the entry around 23565, and I risk $300. That is $290 something across 2 accounts, targeting for $600. And the trade failed. It pushed lower and it took me out. So now what would I have done differently is I saw an opportunity to short NASDAQ towards the 15 minutes, that is to take a counter trade towards the 15 minutes entry. But I didn't take that entry. Why? Because I am more, confident in taking the long entry than the short entry. But trading sometimes is about what the market is willing to give at the time it is willing to give that opportunity. So had it been to say I take this trade because we have this structure broken after the market took this high, right? We have this aggressive push, and then we have this structure, market break this low. And after market broke this low, you can see we have this fair value gap. And checking at SP500, it gave the same thing. So we have this fair value gap. This is where I should have take this entry, even though it is counter trade, but this is like market offering an opportunity for me to make my money, but I didn't. So I stick to the plan, upon which both ways are plans. If I take this is a valid setup, but I stick to taking entry in this 15-minute fair value gap, and then boom, that trade failed. And then later on, there is a buy setup after it violated my fund of interest. So learn lesson, and the most important thing is I have followed my plan, and that is the outcome you always get is when you keep on following your plan and showing off every day. Sometimes you count profit and sometimes you count losses, but the main thing is to keep on following your plan, and in the long run, you are going to emerge profitable. So this is just another day in the business, and see you in the next video.